All right. Good morning, traders, and welcome to the opening bell. Today is Thursday, May 14th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the morning with you guys today. Sorry about the mishap there. It's an interesting start to the day. So President Trump is in China. He met with President Xi earlier today. They had some commentary back and forth, highlights. Basically, interestingly enough, President Xi is stressing the Taiwan issue. And that's been sort of the larger part of their side of the discussion. Obviously, President Trump coming with his side on the economic stream and the trade disputes, at least with all of the CEOs he brought with him, just trying to open up the trade barriers between China and the US. Nothing really heavily related to the strait. They agreed the strait needs to be open. There shouldn't be a toll, but nothing concrete has hit the market just yet. As it stands, it's steady as she goes. Still near all-time highs on the S&P and the NASDAQ. We'll go over all the US dollar crosses, gold, and a quick look at oil. Not much movement there. Any other questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone in the room. Hey, Ahmed, Ashish is here. Christopher, Dan, David, James, Yana. Huge packed room today. Robert, Mesfin, won't get to everyone, but great to see you guys this morning. Here's the DXY, okay? So the levels we've been reviewing are just been step clockwork. First was the yearly open. We broke through that on Tuesday, tested it as support, rebounded. Second was the 200-day moving average. We tested that yesterday, kicked back. Look like we're trying to buckle through it now. The last of the major levels of resistance on the near-term front still remains in sight. 98.78 into 98.69. This 10 pip zone right here. The August high day reversal close, the May lows. You've heard me say these levels over and over again, guys, over the last couple of months. The 38.2 of the year of the decline off the yearly high. All that converges right here with a decent pivot in price right in that level. So DXY is approaching that level right now. I was messing with some slope earlier today. I don't know if there's any merit to this yet, but just to give you guys an idea, that certainly does look like a decent touch of support. If this is a pivot above the 25% parallel, there's that hurdle, but the median line basically converges on those swing highs, 99.20s, 99.18, basically into mid next week, early next week. So if this slope is intact or is in play, it would keep the focus still higher above the yearly open, 98.24, the monthly open just a bit lower, 98.12. So that's where I'd want to keep like near-term bullish inbound. But this immediate advance is now approaching resistance, RSI, now approaching 70 from the underside. So looking for a reaction right here, okay? That's the break that we need to validate a breakout of this late March downtrend. Make sense? That's the hurdle. So this is your first major test here. And for the euro, very similar scenario. Here's what the euro dollar looks like on this kickback. Note real quick, I just want to remind everyone, guys, this is the weekly chart for the euro that we've been tracking on the weekly charts and the monthly reports. We talked about the fact that euro is running into resistance, right? RSI was still holding 60. Euro is running into major lateral resistance at the 2025 high close, 1775. This year's open, the high week close from last year, that whole zone. Downtrend resistance, remember that's the 618 of the slope. So if you click on that pitchfork, that's the 618. Really nice level. So here's the kickback. So this kickback now is approaching that major level hurdle support that caught support last month. Remember on the daily charts, these are monthly breaks, these vertical lines. So right down there, it's same exact level, 1667, 1682. You're talking about that swing high from back here in March, the 200-day moving average, a 38.2 retracement of the rally off the lows of the year. All of it converge on the objective monthly opening range lows right there. That's key support for euro. We're approaching it now. Okay, so if this near-term upslope, remember we said that this was only a 2-point touch, so we don't want to stress it too much, but the break was pretty brilliant. That slope now converges on that pivot, yearly open, monthly open, 1731, 1745. If Euro is heading lower on this stretch. Rallies would need to be limited to the yearly open. Key support on the downside, 1667 into 1682. Questions on the euro? Similar scenario here. I don't know if this is a viable slope just yet, but was looking at it this morning. Looks pretty interesting. If we take the actual high into account, kind of messes it up a little bit. But if we take that late high into account, looks like it could be a very similar scenario that we're looking at with the DXY. Break below that 75% parallel, testing it as resistance, but there's support. So it's too early to rely on those slopes. Main focus right now on the euro decline is what happens on that stretch towards 1667, 1682. If reached, resistance now 1745. Key resistance, the level that you would need to mark resumption of the uptrend, to mark basically a test of the yearly highs, essentially, is still going to be that key 1813, 1826 level that caught the highs last month. So one other thing, guys, this, if all the jargon is kind of throwing you off, one other basic thing. You look at a trade like this, what's an objective take on it? This is your monthly opening range. Here's your monthly open. You set a high, you set a low in the first 5 days of trade. You test the highs, you test the highs. The monthly opening range is set right above support. So a downside break essentially would have you looking for a late month low. Same thing on the upside break. Albeit you still have to beat 1826. But at the end of the day, the fact that the monthly range is sitting right at support, further conviction if and when we get that break. Make sense? That's euro dollar. Sterling, I did a piece for StoneX TV about this earlier today. The break of that late March uptrend, if it was legit, and we've been saying this since Tuesday essentially, then this rally should be limited to 35.47. We made a couple attempts overnight, but it basically held. Here's another stretch lower. Key support is now within view. Where's key support? Objective. Yearly open and the February low day close. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. That's where we open the year. That's the low day close, okay, that we made back here in February. Been a very nice pivot in price. The March highs fall in there as well. That's all 34.65 into 34.73, 74, basically a 9 pip zone. So by Sterling's part, this move here today, we still haven't confirmed it, okay? But this move here today is attempting to break what? The monthly opening range low in the British pound. If that break is legit, you'd be looking for a late month low. Nothing supersedes basic support and resistance. So 34.73, 34.64, 65 is still critical. Look for a reaction there, just a little bit lower from where we are. This is the same slope we've been tracking. And look where the median line falls from the objective high, low, high. The median line is right there converging on that same spot. So I'm looking for a reaction there. Downside break would open up the 200-day moving average. You're looking at 34.25. The 618 of the rally comes in at 34.50. Okay, that's going to be off with slope basically as you get into the tail end of this week. But at the end of the day, that's the risk on a downside break below that median line. Initial resistance still 35.47. Key resistance, bearish invalidation, basically bullish resumption is basically 36 proper, 35.93 into 36.05. You're looking at the objective monthly open, the 618 retracement. This was the rally, the resistance that we thought was going to cap the rally early in the month. You popped through, you quickly ducked back below again, was kind of a mess, but you have the monthly open there. You've got the 618 of the yearly range there. You've got the May and August highs from last year's there. That's key resistance right now. And a break above that would necessitate breaking out of this near-term downtrend. So all things held constant, the levels are pretty clear on the British pound. On approach, looking for a potential inflection, acceleration if it breaks, but a reaction off that test of 34.65, 34.74 if reached. Bearish invalidation, 36.05. Questions on the British pound? Keep in mind, next week, by the way, we do have some sterling data. We get an update on CPI, which is going to be critical, and the employment report out of the UK early and mid next week. So some event risk on tap. Earlier today, by the way, I forgot to go over with you guys, we did get the release of some US data. That retail sales print came in stronger than expected. essentially in line, a little bit stronger than expected ex autos, but also the initial jobless claims is a little bit of a disappointment. Came in at 211. Keep in mind just a couple of things, guys. Sub like at 199 or below on weekly jobless claims, those would be lows we haven't seen since like the 90s. So while it is a miss, 211 is a pretty decent print on initial claims. So nothing really like to move the needle at all from the outlook on the labor markets. Continues to shine a clear shadow or clear spotlight, I should say, on this issue on the back of the latest CPI report and the PPI report. Man, the inflation outlook does look quite dire from the Fed point of view. All right, questions on sterling. The fourth consecutive day down, by the way. We're trying to snap what, a 5-week winning streak in the British pound. Just some notes from this morning. It's a 5-week winning streak. There's that 618 buckling for the last 3 weeks. We've been straddling it. This week, watch this tomorrow. We'll look at it again tomorrow morning. Is poised to mark an outside weekly reversal. I think I might have mentioned to you that yesterday. So certainly another technical factor that is threatening the potential for some exhaustion here on that sterling move. Okay, Aussie dollar trying to make a topside move and then buckled. Here's what Aussie looks like on the intraday chart. So yesterday, Wednesday, we said, look, the weekly opening range is set right above support. It's a simple setup. If we break the weekly range highs, look for a test of key resistance, which is 73. If we break the weekly range low, there's the monthly open. The bottom end of that is 72 proper. Forget about it. Then you're looking about a larger setback within this larger uptrend in Aussie dollar. So what happened? An overnight trade, you tried to break higher, but you couldn't even make a close on a 4-hour chart above that Monday high. And then you buckled lower. So the onus is still on the bears to clear a move sub 72 to validate a break of that April trend line, basic trend line, 1 touch, 2 touch, 3 touch confirmed. That looks like a potential break. A break below the monthly open would open up the potential for a larger setback in Aussie. It would be a quintessential exhaustion trade. Remember, we've been talking about the ongoing divergence. As price action has been making these last series of higher highs, the oscillator has not been able to validate a new extreme at all since last month. So it's been a waning upside trade. Now, we can't say that an upside high or a near-term high is in place yet. We can't get a validated short bias yet, lest we close and break below the monthly open. That would be an objective range break, an objective weekly opening range break, and a slide back below the median line, which would suggest potential for a test of uptrend support. Okay. Obviously, guys, as always, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals here. Northbound of 73, those targets don't change. 74.26 is the 2022 high week close. Obviously, the upslope is going to be variable based on time, but that's your next lateral level on the upside if this were to break. This is big. This is big. So still looking for a near-term breakout here in Aussie dollar. Dollar CAD still holding key resistance. 37.25, 37.33 is absolutely paramount. If you were here yesterday or any time here within the last 6 months, you've heard me talk about this level at length. The August low, the September low, the 38.2 of the decline off the November highs, and this year's objective yearly open, the February range highs all converge right here. The definition of a pivot zone. So we're there. We identified that on Monday. We talked about it on this pullback and rebound. There it was on the Tuesday stretch. Yesterday, we held below. Here we are yet again. The slope, that proposed slope that we added last week, is just a bit higher. So I would hate to get faked out here on like a test of that slope and then a whip back. I want to see a break of that parallel to validate. There's lots of room. 38.08 into 38.14 essentially opens up the 618 of the decline off the highs from March and the objective 200-day moving average. Not Mike Boutros' opinion, not Forex.com's opinion, fact. So both of those levels converge right up there. If you look at that near-term slope, that would basically give you Monday, Tuesday of next week. So looking for a reaction right here on dollar CAD, basically sitting right below resistance. Aussie dollar trading just above support. See if we can't get an inflection off this. We might need a catalyst. The catalyst might come by some way of headline from China. It might come by some headline of the war in Iran. At the end of the day, we're poised. Both those markets are sitting on a pivot zone. Dollar yen. This is the reason I was telling you guys I don't like this trade, and I don't have any business in it. Okay, 57.42, 57.70, right? That pivot zone we talked about yesterday. I was like, I don't know. Do I want to get long and try to fight the BOJ and the Japanese officials, or do I want to get short as it's trying to break a near-term pivot zone? So here's the crawl higher, crawl, 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 slam lower. This is why this trade for me is like you're playing Russian roulette. So I really have nothing to say on dollar yen, guys. You know, that's a pivot zone for me. If we resolve a close northbound of that, maybe you get some further upside. Have no interest in it. And I think it's going to be in that sort of no-go zone for me for a while until we get some further technical clarity. Key support, listen, key support still doesn't change. 54.70 into 55.40. That's still critical support right here. That's the uptrend from way back there in April of last year. 618 of the yearly rally or the yearly range, the yearly low week close, the bottom end of that zone, key. Need to close above 58.64 right here, 58.70 to get the validation. That's the low day close from April before that break that we made to the close of the week, into the close of the month. That's the pivot that would put me back on, okay, maybe they gave up, but no interest there. Last but not least, real quick look at dollar Swiss. We were talking about the pivot about 78.16 and the monthly open, which comes in just a hair lower. That's what it looks like. Yesterday was a confirmed break above it, but here we are testing as support. There's not much run through. You're seeing some divergence in momentum. Starting to, you know, it's not really an appetizing trade if you're not involved. If you are already involved, especially if you're on the long side of trade, this is something that, you know, you don't know how much oomph is going to be behind it. So you want to start to wrap that up, reduce position size, bring up protective stops. If you're looking for new exposure, do note that the threat still is that it could go for a clip of 78.60, 78.70s. That's the 618 of the drop. That's the 38.2 more broadly of the rally off the yearly low, the October, November lows, the December close low. Huge pivot zone. Huge pivot zone. So like that's the confirmed breakout that you would need to suggest a more significant low is in place and a larger trend reversal is underway. Such a scenario, you'd be looking for 79.25 all day long. That's the yearly open, the 618, and the 200-day moving average. But you know, that's the breakout zone. So all this is right now simply is a rebound within a broader downtrend. So I'm not involved in this, just as a disclaimer, but that's kind of the take on dollar Swiss here. It's a big level. I'm not too surprised to see the recovery off it. Here's what it looks like on the weekly charts. We've been tracking this as well. Keep in mind, it's the 2011 low week close all the way back here. The week the low is registered, the close of that session was right there at 77.69. So, you know, the retracement comes in at 77.72. Either way, we're right there. So dollar Swiss, see if we can't get any follow through. If this breakout's legit, we kind of need to hold support right at that monthly open. Looking a little tired here. Okay, gold. I will be releasing a piece on FOREX.com later this afternoon on gold. Here's what the setup looks like on all the time frames. So you guys have seen this all before. I cleaned it up just a bit. I was showing you the 618 of the October rally. Excuse me. I've removed that just to clean things up and tighten things up just a bit. 44.92 into 45.33. Basically, that's going to be your key support zone. That's the 2026 low week close and the 2025 high close. So right here, this pivot zone. Caught the lows last month, caught the lows last week. That's key support. Right now, you're testing the median line of the multi-year pitchfork we've been tracking. Really nice inflection there. Breakout, acceleration, break below. That's what we're testing. The high week close, the record high week close is 48.894. Okay, so that's the stage set from 1,000 feet up on the gold chart. Dig down deeper. Here's the daily. Into the start of the month, we talked about ongoing divergence on momentum as price action was testing that key support zone, 44.92 into 45.33. We dropped into there, divergence, nice move, rebound. The 618 caught the rally last week, 47.42. Great. We came into the start of this week saying we're right at resistance. Let's look for a range break, an opening range break right here for the week. If we breach higher, look for key resistance. Caught resistance last month, but that's still 48.55, 49.10. Key support, we already know what that is. The monthly opens right slap in the middle. Drill down deeper. Here's the 4-hour chart. So this might be null and void by the time I publish this report, but this is what I'm looking at right now. The weekly range is set by just that Monday candle, guys. Here's your Monday open. You set a low, you set a high. Tuesday, you try to test the low, it holds. You try to go for a test of the high, you can't even make it there. Contracting range. Lower highs, higher lows. If this pitchfork from last week that we were tracking is still legit, you're basically sitting at support. Lateral support comes in 46.05 into 46.22. That's the objective monthly open fact. That's the 618 retracement of the monthly range fact. That's right here. This break is what would open up the potential for another test of the lows. So initial support, initial resistance 47.42. You got your weekly range set right below it. Top side breach, you're looking for 48.55 all day long. So this is poised for a breakout. Lots of these trades are poised in the weekly ranges, guys, for a breakout. Specifically as it pertains to gold, this rally came into Fibonacci resistance. We've been testing it for the last 5 days. The range is set right below. Look for a breakout for guidance here. The broader trade still remains constructive above 46.05. So even if you get the break of this slope, if that low holds at that 618 of the monthly range, you still want to look for support. But at the end of the day, that's your break that would suggest a deeper cut. Resistance 47.42. Weekly opening range is set. Heading into Thursday. Okay, oil seeing a little bit of a kickback here, but nothing much. We're still straddling 101, 101.50, same region, right along that median line. Very susceptible again to headline risk. No trade, no update on the oil charts from here. We're still looking for some sort of news or some sort of headline to give this thing a kick one direction or the other. Bitcoin is still hovering below 81,000. That lateral level, we were looking for resistance. We saw a couple of attempted breaches on a topside break, both of those on building divergence. So higher high in price, no new high in the oscillator, a lower high in the oscillator. Both those reference points below 70 suggest, again, the threat remains for some exhaustion, but still within the confines of that February uptrend. So no change to any of the levels we've been looking at on Bitcoin. All right. That's everything I got on my front. Any other questions you guys have, do let me know. The BOJ has stepped in again, says Ashish. Yeah, potentially. I wouldn't be too surprised if they did. But, man, like how long can they keep this up? It's going to take more than that. I don't know if we can even assume that's BOJ intervention yet, but potentially. And this is why this trade for me is like, this is a gamble. I'm looking to trade clear technical parameters, clear technical setups. I'm not looking to trade a ticker or a headline on whether there's a central bank intervening, or it's too variable. It's too variable for me, Ashish. Just my personal take, guys. I don't want to dissuade you if you've got a decent setup on it. It's just not my cup of tea. Any other questions? If not, we will go ahead and wrap things up. Remember, event risk mostly for the week is basically said and done here. We're heading into, again, President Trump, I think, leaves tomorrow, if I'm not mistaken. So we'll be looking to see if any headlines come out from the meeting with him and President Xi. Obviously, the war headlines will remain central focus. Markets are continuing on the go. That earnings have been decent. Employment data has been decent, save today's weekly report. Add to that, we've gotten some pretty hot inflation reports. The markets continue to price out, by the way, interest rate cuts. And now we're fully priced in, or at least for March, you're just above 50% for a hold, but you're talking like 48% that we're going to get a hike. Go out into April, and that starts to materialize to above 50%. So gone are the days of looking for more easing. The markets have fully swallowed and digested the fact that we're probably not going to get any more cuts. And in fact, the next move will probably be next year for a hike. Again, for the US dollar, that is supportive, but we are heading into that major key resistance zone, and we want to see a reaction. We just clipped it right now, by the way, guys. The bottom end of that zone, 98.69, 98.78 is the top end. Look for a reaction here in the DXY today. We'll pick things up tomorrow. Best of luck trading, guys. God bless. Cheers.